Morning, everybody, and welcome to another edition of our continuing series on the American Rescue Plan. And today, in a second here, I'll be joined with my partner, Stephen Elwell, CFP, our Chief Investment Officer here at Level. I'm Mike Hebern, the COO of the company. And today, we're going to focus on unemployment in the American Rescue Plan. And so, Steve, let me ask you real quick here in the beginning. What was extended under the American Rescue Plan when it comes to unemployment?
Yeah, so back in the CARES Act of 2020, and then the bill that they signed into law in December of 2020, they had extended and originally created and then extended federal subsidies for the states to help provide and shore up unemployment compensation funds. So that's now been extended through September 6th, and that was scheduled to expire here in the middle of March. They also extended what they call the Pandemic Unemployment Assistance, which is sort of a sister program that allows self-employed individuals to make a claim as well. So like freelancers, independent contractors, part-time workers are typically the people that fall in this group. So like we saw like an Airbnb host who had virtually no income in 2020 because of the pandemic was able to make an unemployment claim. So that program has been extended through September 6th. And then also they have extended the weekly unemployment compensation that the federal government supplements for the states through September 6th. So as a reminder, that's an extra $300. I think it's a week on top of what the state will pay. And obviously different states have different rates that they pay. But the extra $300 a week that the federal government will pay will be through September 6th. So basically an extension of everything that they've already been doing here for another 6 months. And, that'll provide a lot of relief for a lot of people.
Okay, so for those who received unemployment benefits in 2020, I'm sure there's some planning opportunities here and some things, important things that people have to think of. So what do people have to think of when it comes to those who received benefits last year?
Yeah, this is, it was pretty widely expected all along that unemployment benefits at the federal level for these various programs was going to be extended if they passed another stimulus bill. The new piece is for those that received unemployment benefits in 2020, calendar year 2020, up to $10,200 of unemployment benefits will be tax-free if your income is below $150,000. So there are a bunch of moving parts of that I want to walk through here real quick. And Mike, feel free to jump in if you need me to clarify something as I walk through each point. But there's a lot to unpack here. So first, if you received unemployment benefits, generally they're taxable. You have to pay federal and state taxes on those. They often withhold taxes directly from that. So usually you have to count that as taxable income. What this bill is saying is if you receive those benefits in 2020, having to pay tax on that on top of losing your job is kind of a double hit during the middle of the pandemic. So they're trying to provide relief, tax relief, for those who receive those benefits. So that there are a couple of notable details about it. First, the $150,000 income limit, that is based on your adjusted gross income. It includes the unemployment benefits that you received. So if you earned 80,000 and received 10,000 of unemployment, the number you're looking at is 90,000 when you're using that to compare, well, what is my adjusted gross income? And that $150,000 AGI limit, that applies to every single filing status. So usually they give like a single is this number and married is double that number. That's not the case on this one. If you're single, it's $150,000 AGI limit. If you're married, it's $150,000 AGI limit. If you're married filing separately, if you're head of household, all of them, it's $150,000 AGI limit.
So basically, if you're single and you received unemployment benefits, you stand obviously to do a little bit better than than folks who are married.
That's right. This would fall under one of those categories where people would claim that this is a marriage penalty, where the single person is getting a bigger benefit than what the married couple would be getting, and that's true. My best guess is they put this in there so fast that they just didn't really want to, screw around with it too much, and just said, let's just make it flat and simple and easy, 150,000 across the board. And I believe that because there's a second factor here that makes it clean and simple, and that is there's 100% cliff on that dollar amount, that AGI dollar limit. If you have $150,001 of income, then you get no benefit on having unemployment be tax-free. If you have $150,000 exactly, then you do get the benefit of the $10,200 being tax-free. So $1 over and you get no benefit. And that usually they phase these things out, so it's not that aggressive. In this case, they didn't do that, which again kind of tells me maybe they were trying to just get this wrapped up quick for this particular provision. So one other thing I would add is it looks like that 10,200 is per person filing. So for a married couple, that would actually be 10,200 for each of you. So they do help a married couple on that front. Obviously, if you're a single filer, then 10,200 is just the number that could be exempt from tax of unemployment benefits. But if you're married and you both got unemployment, it could be 10,200 for each of you for a total of 20,400 that would be exempt from tax. So let's see, we covered those pieces. There's a couple other pieces that I want to talk about on here. So the most obvious question would be, if I have already filed my 2020 tax return, because we're in the back half of March here, if I already filed my 2020 tax return and I had unemployment benefits and I qualified under this provision to have that be exempt from tax, but I already filed it and I already paid tax on it, what do I do now? Do I need to go amend my tax return, or do I do something different? Well, first off, you really couldn't probably even go amend your tax return if you wanted to, because it's so new that the tax software doesn't know how to deal with that. It doesn't know how to correctly report that. So the IRS has basically said, take a pause, wait, we will issue guidance in the future, in the next couple of months, about what you should do if you already filed your 2020 tax return, paid tax on your unemployment benefits, but you should have been exempt from tax on those based on this provision. So that one is yet to be determined exactly what you should do if you've already filed, but the key is don't go back and try and amend your return. You're probably not even going to be able to if you wanted to. If you haven't filed your tax return yet, the good news is the IRS just extended the tax filing deadline from April 15th to May 17th. So they bought you more time to wait for the tax software to be updated, so you can potentially have this correctly reported and not have to pay tax on those unemployment benefits if you qualify. So, again, waiting for that, that to be finalized, and software pieces such a new piece of legislation. But ultimately, good news for people that qualify. And then the last thing that I think is important to talk about is it's not exactly clear how states are going to handle this. A lot of states typically follow whatever the federal government does when it comes to what's taxable and what's not taxable. In this case, it's so new, we don't know yet who's going to do what. What's Pennsylvania going to do? What's New York going to do? What are the other surrounding states? No matter where you live, what's your state going to do? We don't know. So that remains to be seen. So there's kind of a few moving pieces here. The only other thing maybe that I would add is for those that are preparing their 2020 tax return that haven't done it yet, that are about to, if you find yourself right on this AGI limit, and you're just a little bit over what the limit is, and that means all your unemployment is taxable, and you may want to consider if you have the availability to do any of the tax deductible maneuvers that are still able to be implemented for tax year 2020, even though it's tax year 2021. So for instance, most specifically, what I mean is you can still make a health savings account contribution for tax year 2020 and deduct it on your tax return. There's no phase out for that. So that's income wise. So that's like the most obvious choice for someone to try and reduce their income to maybe get below that line. Because remember, it's 100% cliff. So, $1,000 HSA contribution that gets you below the $150,000 line. If you also had unemployment benefits that were taxable and now they would not be taxable. I mean, that literally could almost more than pay for itself in theory. If you put $1,000 in an HSA, it gets you below the line. Now your unemployment's not taxable. The tax savings could be over $1,000 to put $1,000 into an HSA. So that's one of the most obvious choices. The deadline for HSA contributions matches the tax filing deadline. So that's May 17th. The other option would potentially be a traditional IRA contribution, or if you were self-employed, potentially SEP IRA contribution or individual 401k contribution. I think the key is if you're close to that $150,000 line, you better talk to either your accountant or your advisor and say, is there any way for me to get below this line so I can have my unemployment benefits be tax-free?
Yeah, I might recommend that they actually take this video and share it with their tax preparer, because really there's, especially for people that are close, I mean, there's some real considerations here for savings. And I think that it would be really wise for people, especially those who haven't filed, to take a really close look and talk about this with their tax preparer so that they can realize those savings.
I totally agree. I think, tax year 2020 filing for this year is one of the most chaotic tax returns that we will probably ever file, because of all the stuff that happened in 2020, but also because of all these late things that are coming down the pike now. I mean, you got to feel for the accounting industry. They're going to be pulling their hair out trying to deal with all the questions that are coming from 3 rounds of stimulus packages that keep changing the rules on what's happening, on top of all the normal tax filing season madness. So we're empathetic for our accounting friends.
All right, well, great. So that was a really good, concise recap of unemployment and how it might affect your taxes. So I want to thank everybody for joining us today on our 3rd installment on the American Rescue Plan. More to come. So thanks for joining us on this beautiful Friday morning here in the Buffalo area for those around the area. And until next time, have a great weekend.